not do a live call this morning. I thought yesterday we knew that it would probably be a really, really late night, and we thought we would maybe know the results of the election, so we opted to wait and record it after the close today so we could see how the markets reacted. And I guess we were partially right in that the markets did react, but we don't know what they reacted to because we still don't know the result of the election. So as I record this at 2:30 in the afternoon, we still don't know the results. Both sides seem to be claiming that they won. So let's just look at what the grains did and work from there. Okay, you've got January soybeans on the chart in front of you. This is the chart we've been working with for quite some time. We had this peak. We sold off. We came and challenged 1045, and then overnight, about 3 a.m., beans got really, really hot. Let me see. I'm looking at another chart here. Exactly what time did they bottom? Yeah, they bottomed at 2 a.m. In the night, and buying emerged, and we rallied 30 cents from the low here overnight in soybeans. So what does that mean? We've been calling for this to be a top, not necessarily the top, before we turn. But we thought that we would have a correction before we would turn around and go higher. It looks like that's probably not going to happen now. It looks like this was a correction, and this is going to likely break out to new highs. In all reality, 1110, 1120 is our next range that we look for it to trade to. We think that this is an extension of the same move, and then maybe we'll find the top and go get that deeper correction that we've been looking for before a bigger wave starts. So what's driving it? There's a couple of things going on fundamentally that may be telling us that we need to go much higher sooner rather than later, and that it may be quite a while before we get a break. The first is South American weather. We've been talking about it. It's dry. It's there's a lot of yield uncertainty in South America, and secondly, there is talk among the marketplace that the yield here in the U.S. will be decreasing from where we currently have been sitting, and there's even quite a bit of talk of sub 50 soybean yields, which would make our balance sheet extremely tight. So that could be a catalyst for why we saw today's move. Maybe it's not that. Maybe it was just kind of riding the coattails of the stock market that moved a lot higher. I don't know. But what I do know is that we came within, I think, a quarter point. Let's see here, the high today was 88. The high of the move is 88.5. So we came within a half point of the high. We do have the highest close of the move, and so you got to just sit back and say, all right, we're probably going to keep working higher, and this thing's gonna move on in and expand up. These lower indicators will likely trace yet another divergence coming off of this high, and if they don't, then they'll move into kind of a blow off top type situation where, but we can't predict where that top might go. It could go to 1110, it could go to 1150, it could go to 12. We could turn around and die tonight and say, nope, the high is in. We just don't know until we break this high and hold it before we really get a good handle as to exactly what it is that we are looking to do. So stay tuned in soybeans. We could really actually see quite a bit of upward movement here if we can challenge 11 and break it. All right, let's look at December corn. Corn was a little bit less enthusiastic today than wheat, but it did trade a 10-cent range today. And in corn, that's a pretty good range, and we closed very strong. Most of the day we sat right below $4. We kind of traded even to slightly negative all day, and then kind of in the last 45 minutes we rallied and closed near the high. If this continues to turn around, uh, corn could easily follow beans higher and challenge this high at 422, and ultimately could come challenge a higher level, potentially 430, 440. And if it does catch a bid, then it might move on and do it quickly. Like beans, it looks like if we do come out to a new high, we'll be setting up divergences, which are something that probably ought to be sold. Now, like beans, fundamentally what's being talked about are lower yields here in the U.S. and carryouts, significantly below 2 billion, maybe even as low as 1.5 billion, with other countries short, in drought, and China needing to buy. So there's a bullish story brewing here that could take us on up, and we've been thinking that we would trade sideways to lower. Really, we thought we may even get down into this 380 number. It looks like we may just decide to move on up here sooner rather than later, and if it does, that would be certainly that would be okay with us. We still have this open gap back here all the way down at 344. No one wants to talk about that. No one wants that to be there. No one wants it to be real, but it's there, and corn gaps tend to get filled. So at some point in the future, this is kind of an ominous thing, but that doesn't mean we can't go quite a bit higher in the meantime. So um, we'll just have to wait and see what happens. Let's look at Kansas City wheat. Kind of like corn, it was really kind of lackadaisical all day. It really didn't do a whole lot, and it just couldn't seem to catch the same bid as the beans. But on the other hand, we have a little bit of bottoming and reversal type action down here, and that puts this high in play if we can start working out up above this 560 level. So if corn and beans are working higher, I don't know why wheat wouldn't, given its conditions reports and just kind of the overall money flow. Now, I don't know why the markets would react too significantly one way or the other before the election is done. Maybe that's just telling us that the election never really mattered to the grain markets, and we're now just going to focus on real fundamentals. We don't know. So we'll stay tuned on wheat. Our bias is higher, certainly, unless we're able to take out this 532 number. Anything above that, we would consider as bullish. Corn, same thing. Really, anything above 390 is bullish corn, and we're looking for new highs. Same with beans. So we'll see what happens. Let me give you the weekly chart on beans just so you can see it for perspective. We've talked about this level a lot over the past months, and we are holding it. Last week we had a hook reversal, which is a higher high and a lower low, a reversal down. This week it looks like we're working a reversal back to the upside, and it certainly looks like the high of the November contract at 1093 is in play there as well. This is starting to look a little bit overbought on the weekly chart, and looks like we might need to pause. But on the other hand, if you look at 2016, we certainly didn't. We're nowhere near the same level. Let me pull this out so you can see it a little bit further out. We're nowhere near the same level. This is 2016 right here. Here's where we are today. Look at our lower indicators down here. We're nowhere near the same level of overbought on the weekly chart today that we were in 2016 as we pushed on through here. We've talked about the similarities of this move to 2016 since it started, and I see no reason to think that it's any different this time. And as long as we're trading, above 1060, 1080, then there's no reason why beans can't go ahead and keep working higher. All right, that's only 10 minutes. If you can't tell, I've got a little bit of a raspy voice, and before I start coughing at you, I'm going to call it quits. I do appreciate you listening, and as more happens this week, we may do another short video, especially after the election if we get a significant move. And we'll try to keep you as up to date as possible. If you have questions, please call me. And remember, anytime you're trading futures and options, there is significant risk, and it is not suitable for everybody. Make sure you're working with and consulting professionals and trading within your risk tolerance and financial limits. Thank you guys. Have a great day.